Nishal Maheshwari also joining us on the show to talk to us about what's happening to the market because it's fairly volatile at this point of time and a lot of earnings which have come in through as well. Nishal, hi, good afternoon. Thanks so much for waiting by patiently. Just wanted to begin by asking you about Trent. The stock, of course, had seen a big move this year. A lot of tailwinds that were working out, but today the earnings seems to have disappointed the street. Is this an opportunity to perhaps buy into the stock or it's still very expensive?
So I think the numbers are good basically, but I think there has been, I think below the market expectation because if you remember last year, last quarter, they grew at around 55% and this quarter they're around 40%. So I think 40% on its own is a very good number. But again, if you have such a frothy valuation 120 times, I think market is very unrelenting. And that's why we've seen this kind of a strong cut. Yeah, I do agree. Basically, I think it should be a good time to start accumulating. I wouldn't say go out and buy at one shot, but it's a good time to start accumulating because the 40% growth is still very good.
Okay, that's the take coming in on Trent. Sony, what's your own sense? Do you see further pressure coming in on Trent, considering this is the first big sort of breakdown that one has seen? Yes, the stock has been consistently losing about 1-2% the past couple of trading sessions, but definitely not a 7% fall.
So, definitely Trent has been in a very strong uptrend for quite a while. Now that it has broken below major moving averages on technical charts, one can see it heading towards its 200 EMA support, which is towards 5,500, 5,600. So that gives it gives it enough space anywhere between 6,200 to 5,600 as a support zone, or maybe it can test those levels. So of course, I think the pain is still there. One can see it correcting towards those levels before seeing any meaningful bounce back. At least towards the 7,000 odd mark.
M&M came out with the numbers today as well. Despite that upgrade coming in the guidance, the street is a bit, muted on that one. And Tata Motors comes out with earnings tomorrow. Nishal, what's the view on autos, especially the four-wheelers?
I think the pain still continues in the system, basically. I think two-wheelers, we've seen some amount of strong rebound in the current quarter. But I think the PVs as well as CVs, we have not seen any strong rebound as yet. So there is huge amount of backlog in the system. And I think that's going to be a bigger problem. But I think Mahindra has done pretty well in this current quarter. They guided that they are going to be doing very well as far as their tractor division is concerned. And they have done well. But obviously, as I was saying, frothy valuations and everybody wants to be taking away profits from the market. So this market has now become sell on rallies rather than buying on dips. That is what I very clearly see now.
Okay, that's M&M. Tata Motors, of course, awaited. Let's address the other pocket, which is really getting a pounding today, and that's Hindalco. Not just Hindalco, but you're also seeing what's really happening with some of the banking names, for instance, too. ICICI Bank now down 2%. There's, of course, pressure on the other banking names as well. HDFC Bank, you've got an Innocent Access, etc. as well, which are also in the red, along with, of course, Kotak. Nishal, do you think days like this could be buying opportunities for the private banking names, the large ones?
Definitely. I think banks, BFSI is a whole space per se, basically. So 2 or 3 reasons out there. One, the whole space has underperformed. And that's why I think reasonable valuation. Secondly, I think the interest rate cuts. One is going to already started in US. We are expecting another 25 basis point cut today in the US. And I think sooner or later, India will also follow. So in a decreasing rate regime, banks have always outperformed. And the second thing remains to be basically in a decreasing rate regime, their margins will also go up. So I think fundamentally also it's positive for BFSI. So you should be buying BFSI across the whole sector.
BFSI, but since we are on the topic of BFSI, let me take it across to Gaurav to get a sense as to what the expectations are from SBI this time around, because the numbers are expected tomorrow. We have seen that the banking stocks and the banking majors have reported mixed set of numbers, but what about SBI, Gaurav?
India's largest bank, SBI, is all set to come up with their second quarter's numbers. And when it comes to investors, they are expecting some kind of strong set of numbers from SBI, because when it comes to loans, they are expecting the loan book to grow at around 14 to 15%, which is higher than the overall industry, and that is the reason why we may see net interest income increasing almost by 5% on a year-on-year basis. Apart from that, when we talk about net interest margins, we may see a little bit of moderations. Net interest margins may go down a little, almost by 500 basis points, and the reason being that a partial impact will be seen because of the penal interest charges, and at the same time we may see some normalization also happening. Other than that, when we talk about cost to income ratio, we are expecting to see some kind of moderation there, and that is the reason why PPOP may grow around 25% on a year-on-year basis. And lastly, when we talk about profitability, there also we may see some kind of growth of around 9%. When we talk about provisions, now analysts are not expecting any kind of negative surprise from SBI. In terms of slippages, we may see the number a little bit higher because of the exposure to MTNL and at the same time RINL. In fact, when we talk about the updates that have come from SBI, they have already downgraded MTNL's exposure of around 3,200 crore rupees to NPA substandard. So slippages is something that we will be watching out for. But overall, when it comes to asset quality, we are not expecting any kind of downgrade momentum coming up in asset quality. Lastly, when we talk about deposits growth, we may see a little bit of softness, but when it comes to CD ratio, SBI is still sitting at a healthy level, and that is the reason that might not be a constraint for loan growth going ahead. Lastly, any kind of commentary on the asset quality is going to be something that we will be watching out for, and any kind of commentary on the management when it comes to ROA is something that will be key to watch out for in SBI. But all in all, a strong set of number is what we are expecting from SBI.
Okay, that's that on SBI. And, since we are on the subject of autos, Tata Motors will be declaring its numbers. So let me take it across to Shrishti and find out what the street is penciling in for Tata Motors.
Well, this time from Tata Motors, we are expecting a decent set, but indeed the margin figure on a consolidated basis, and especially the JLR EBIT margin figure, will be the key monitorable, because all in all what we have seen is that the India business didn't perform that well, because there has been a decline in the volumes for their passenger vehicle as well as their commercial vehicle segment. When it comes to the JLR volumes, that is expected to see a low single-digit decline on a YOY basis due to the supply challenges. But the silver lining in the JLR volumes is that the contribution from some of their higher ends models is been significant. That could actually support the number for JLR division. If we talk about the JLR EBIT margin, that is expected at 8.2%, but sequentially too there will be a decline of 70 basis points if these numbers come in at as per our expectations, but that will be primarily due to the low volumes and the rising discounts. If we talk about the India business, then India commercial vehicle EBITDA margin also expected to see a decline, and 10.8% is what we are expecting, while the passenger vehicle segment, that too saw a bit of a pressure in their volume figure. Margin number expected at 5%, declining from 5.8% what the company witnessed in Q1 of FY25. But let's also take you through the consolidated number expectation. Revenue is expected at 1,05,056 crores. EBITDA is expected at 14,474 crores, while the consolidated margin figure, do watch out for 13.8% is the number what we are expecting. And lastly, on the profit figure, 5,038 crores is the number that we are expecting. But indeed, on the management commentary side, the key monitorable will be the outlook on the various segments of Tata Motors, be it JLR or the India or the commercial vehicle business. How is the company foreseeing the volume growth outlook? That will be the key to watch out for. Okay, we'll watch out for those stocks, and of course the earnings expectations come tomorrow, but just waiting by and seeing what else is happening in the market right now. Good move continues on Apollo Hospitals, Coromandel, Gujarat Gas, Chambal Fertilizers. These are some of the stock in the green, while Hindalco, Glenmark, Trent continues to be in the red. Nishal, wanted your view on the pharma stocks, because I mean in terms of the earnings, more or less the earnings have been good or in line with expectations, but the stocks have run up slowly and steadily. If you look at the last 12 to 18-month move on these names, they're up anywhere between 60% to 100% or even more. What looks good in pharma at the moment?
So I think with the Trump coming there, basically, I think there is one space, the CDMO, where in September, basically, the Senate came out with a biosecure law, and that ensures basically that more or less all kind of incremental R&D which was being done by or getting outsourced to China get stopped. And I think Trump is a strong proponent of that, basically. And I believe basically that's a big space across the whole pharma sector. There are 4 or 5 stocks, big one out there, which are going to gain market share. So I think CDMO is one space basically within pharma, which should do well as we go along. But pharma as a whole space per se basically has been doing okay. And we continue to believe basically that incrementally also pharma should continue to do well in the coming year also.
Nishal, the other stock I want to discuss with you is Nykaa. Right now, that stock is up 7%. And I remember the conversation we were having with Nilesh on the Diwali day and the Mura trading day. And he was talking about how the entire BPC category is expected to take off. Logically, it makes sense that the women participation is increasing in the workforce. There's more disposable income. But this stock has pretty much been sideways for a long time. And people had become averse to both Nykaa's and, the Honasa consumer of the world because of increased competition. Is it time to relook at these names, or there is just that competition worry that might just keep these stocks under check?
I think competition is a big worry for both of them, basically, whether it is Honasa or Nykaa. Maybe Honasa is slightly better placed out there, given they have got products basically which are more, I think, based on natural products. So that's why they have a niche out there. But Nykaa's niche is very, very questionable, because I think they are facing competition from all the large platforms now. And Reliance has also come with a more or less a similar platform known as Tyra. So I think Nykaa has lost its uniqueness, basically. And that's why we are seeing this kind of underperformance by the stock. I don't see very strong results also coming from Nykaa. So I think it's at best avoid.
Avoid coming in for FSN e-commerce for sure. But here's Nilesh Shah as to why he's betting big on Honasa consumer and what's the rationale behind, why he prefers this stock.
There's going to be roti, kapda, makan. Maybe there's also going to be education, health. But after that, what next? It has to be the BPC. And I clearly see that markets like China have witnessed that when you go from $3,000 to $10,000 per capita, you're clearly seeing huge amount of spend go up on the BPC side. And if you get the template right, if you have the playbook right out there, I think you could have a potential wealth creator. I mean, we saw these in the 90s where a lot of FMCG companies rode on the basic staples, what we talk as the soaps and the shampoos. It's now, I think that's now a mature category. You now got to move on to the BPC side. And that's where I clearly think there's a very big, powerful mega theme which is likely to emerge in the next 5, 10, 15 years. It's important to figure out who's going to scale up and who's going to keep growing sustainability. I think that's where basically I think the opportunity is. The conventional, the Goliaths are going to struggle. They will probably grow at 2, 3, 4%. That's about it. I think versus that, if you can spot the companies which are going to grow at 20% types for the next 5, 7 years, I think there's a phenomenal opportunity because the underlying business is a very capital efficient business.
Okay, so that's about the BPC category and how it's expected to grow. But time now to take the BTST trades from our chartists as well. Chandan, you want to go first? What's the BTST trade?
Yes, I'll go with Coromandel. The stock has seen a positive price action even after the market weakness. On daily and weekly chart, it has given a consolidation breakout and surpasses falling supply trend line. Selective stocks from the sector are doing well, and that's why we believe this price momentum could continue. So with support of 1745, we can look for an upside target towards 1830 zone.
Right. Sony, what about your BTST trades?
So it would be a buy recommendation in Naveen Fluorine, which has crossed and sustaining above its 200 exponential moving average on daily chart. So one can buy it with a stop loss of 34.90 and a positional strong target of 3700 to 3740.
Okay, so that's the stock that you like at this point of time. Naveen Fluorine is something that one needs to watch out for, and Coromandel International. Interestingly, both are coming from that chemical space. But that's the question to you, Nishal. Then this is one space that quarter after quarter, I've heard analysts and experts say that this quarter is going to be the worst. So there's light at the end of the tunnel. It's bottoming out, but hasn't really played out. Is it finally the time to look at some of these specialty chemicals back again?
I'm not sure actually as yet, basically, because China is the big spoiler out there, and China is once again going to be betting big, basically, as far as chemicals is concerned. So we have to understand basically that China is not an ROE player; they are scale players, and India, on the other hand, is basically ROE, more ROE focused players, basically. So that's why China just sells at whatever price, and China has got huge capacities. And given that their domestic market is not doing well, they are looking for things to export. So I do not see basically a quick resolution to the chemical sector.
Right, okay, that's the take coming in on the chemical sector. But Chandan, what's your observation? Where is the Nifty bank headed? Because, we're pretty much undoing all of yesterday's gains.
So, talking about Bank Nifty index, we witnessed a decent up move on Tuesday, but follow-up was missing. It failed to surpass a hurdle of 52,500 zone. But the good part is it is holding well above 50-day EMA. So I believe it's likely to be in a broader range for quite some time before it start the next leg of rally. So as per the data and price pattern, I believe 51, 250, 252, 350 is going to be the broader range for Bank Nifty before it start the next leg of rally.
Okay, Chandan, Soni, great to have you guys on the show. Nishal, thanks as always for taking the time out.
If you like this video, then like, share and subscribe to ET Now.